I am mining investor and editor of Resource Stock Digest, Gerardo del Real, here with my partner, Mr. Nick Hodge, who of course is also an investor and of course is the publisher of Daily Profit Cycle. One of many hats Mr. Hodge wears. This is the 279th episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets. We're going to talk gold drop, silver drop, copper drop, uranium drop, JD Vance drop. It's been a week. I gave him a chance last week, and we're going to get right into it in a bit. But before we do, Mr. Hodge, how goes you today, sir? You got the cup of Joe there? Joe on the way out? Cup of Joe for you?
You know, this is just the agua, senor. I was going to brew some coffee, but then I was like, I'll just go for water. It's a bit hot, and I needed quenched, so just a little bit of H2O. But speaking of H2O and speaking of Spanglish and my bad pronunciation of it, and commodity prices going down, I'm not too worried about it because I've got my karma points, and I'm going to try to do a bit more personal touches in these Bizarro Worlds going forward. I feel like we used to do more of that, but try to get back to it a little bit to convey such sort of, how our knowledge and investment prowess translates into the real world and vice versa. So I was floating down the St. Joe River last weekend, which is a river that flows into the Coeur d'Alene Lake, but one of a couple, and not the Coeur d'Alene River, but the St. Joe River. So anyway, it's been super hot, and there's normally not that many people out there, but there was quite a few people out there that we saw tubing down the river while we were fishing, and one of them was a group of older women. And we bumped into them a couple of times. We stop and swim and eat lunch, and other groups do the same. So you go back and forth as you're going down the river. And later on in the trip, it became clear that they were having some trouble, and one of their tubes had popped. One of the ladies was like waist deep in the river, like unable to float down, etc. So,
man,
we gave her some help. We floated over. We were in a drift boat as opposed to tubes. So, got her situated, got her in the extra seat on the boat. Started talking to her, etc. It was like a quarter mile to where they were taking out of the river, and her name was Jessica, and she was from Mexico City, and she was a Spanish teacher from. Oh gosh, I should know this. Was it Idaho Falls? I believe that's right. So anyway, she was on a church tour group with like 30 of her fellow church people.
Oh, man.
Got in literally a bit over their heads, as it were. So rescuing some of the novices from the local river. But anyway, little karma points, and that's why I'm not too worried about the short-term fluctuation of asset prices. Back to you. Sorry to get sidetracked.
No. I like the karma point. I was going to say I've never met an ugly Jessica, and especially if she's a part of a church group. But the risk of getting myself in trouble, I'm going to shut the fuck up and let's get to the markets. Commodities. Let's get right into it. Gold's below 2,400. Silver, which I'm actually, again, my contrarian heart loves pullbacks when I know what the end game is. Sometimes it lasts a little bit longer than I'd like with Patriot, but that may present an opportunity. More on that later on. But look, silver's below 28, and I actually have a recommendation that will be going out to junior resource speculator subscribers here, if not tomorrow, Monday, because I think we may have a tiny bit left in the down action there. So I like gold below 2,400. I don't think that'll last. I like silver at current levels. You are the chartist amongst us, so I'm going to ask you about gold and silver first. What do you see as the downside on the technical levels? And obviously that's what we're using as indicators to rotate into positions for what is absolutely clearly a commodity super cycle we're in, right?
I think it depends on your time frame, which is something you need to often keep in mind that is easy to forget. And something I had to remind myself of this week because it's something I was writing about also in my weekly letter and was reminding subscribers of. Because we have some short-term volatility here, some short-term price action, which you mentioned, gold below 2,400, silver below 30, copper down 415-ish, 420-ish last time I was looking. So
yeah,
let's put it in the context, right? So the context I took was a short-term move inside a long-term super cycle, and we've talked about this over the past couple of years. We think we're in a long-term bullish commodity super cycle inside of which you're going to get ebbs and flows. And so I started looking for reasons, right? I was like, is the economy contracting? And I looked at the GDP and it's like, no, it's 2.8, 2.9%. Like, is India or China absolutely collapsing? And it's like, no, there's like some talk out of China, but they just lowered their interest rate and it's okay. And so I started looking around and I'm like, what is this really? And I haven't found a concrete reason. And at the end of the day, you don't always have to find a reason. But I say that to say that I think it's short-term price action inside of a longer-term upside. And so what I saw was a rotation, right? You're in earnings season. You had Tesla earnings come out, not as good as the market wanted or expected, and that caused the selling. And sometimes it can be simple as that, right? The buttons get pressed, the algos get triggered, and selling begets selling, and vice versa. Sometimes buying begets buying, and everything in between based on a convergence of macro factors. And so I think that's what we saw this week was some profit taking or some selling down of tech, which, valuations are lofty. We know that. They've been running for a long time. We know that. But at the same time, I didn't see any breaking down of broad-based indices. Like the S&P is still bullish. And that's actually good for folks like you and me that 7 stocks that aren't tech stocks are driving the market higher. Like Newmont can have good earnings and go up because Newmont had good earnings. Like, that's good. And then, if the economy can grow, which I just said it was, that's also good. Like, you don't want gold to go to 2,500 or 3,000 because, the presidential candidate got assassinated or this, that, and the other thing, right? Like, for negative reasons. But if you can get that slow burn, your rate cut, the economy's still growing, the inflation sticking around for longer, like, those are good long-term reasons that you can own, in this case, gold. But anyway, going on long in the tooth. Also long-term bullish for commodities. And so I think, what you wanted me to say or what you were looking for is that this is a shorter term thing specifically for gold. Like, I think gold looks really good. Silver leads to the top and the bottom, and that's why it's down at 27 or whatever. But if you were to use this short-term action to establish long-term positions, I think that would be a smart thing to do.
I'll say this. I think the sell-off is likely a rotation, not just here in the U.S., but, the Japanese yen rose to its highest in more than 2 months against the dollar here yesterday. And I don't think it's a coincidence that everything that was liquid, from gold to Bitcoin to some of the bigger tech names, were getting sold off, right? The stronger yen is going to hurt Japanese exports. And so I think that's why the Japanese index corrected as strongly as it did. I think there was some profit taking there. I think they see weakness in their own market, and I think it was an opportunity to take some gains off the table, given gold and silver's recent run and the strengthening of the currency, right? So pay attention to Japan. There's been rumors and whispers, and likely is the case that the government's intervened in the Forex market several times over the past several months. Of course, the last thing they want to do is admit to that, for the simple fact that it doesn't look good if they're having to come in and backstop their own currency, right? But it was at multi-decade lows just a few months back. So for it to surge all of a sudden, I think caught a lot of people off guard. I'm no currency trader, but I do watch the markets on the dollar, on the Canadian side, on the Japanese side, on the Chinese side, and that definitely stood out to me as an anomaly this week. And I'm looking forward to seeing what next week brings, given the fact that we had a stronger than expected jobs report here in the U.S. And I was going to touch on that a bit. Fed Governor Bill Dudley, I believe is his name, who was a very big proponent for not increasing rates at all this year at one point, then said, well, maybe September might be appropriate. Now is actually asking that we do it as early as next week. He believes that we're seeing the early signs of a recession, which that's Fed talk, folks, for not amongst the lower and middle classes, but amongst the rich people. The rich are starting to feel it, is what that means. And I don't think the rich like it. And when the rich start feeling pinched, that's when you get your rate cuts. In case any of you were out there thinking they're doing it to do you all a favor or to do your portfolio a favor, the Fed doesn't care about you. The Fed cares about rich people for the most part. So I say that to say I think the rich people are starting to get pinched, and I don't think it's a coincidence that all of a sudden you have Fed governors and ex-Fed governors that were once very, very on the sideline about rate cuts now screaming and begging for a rate cut as early as next week. If that is the case, you're going to see a quick reversal in the dollar. You're going to see a quick reversal in gold. You're going to see a quick reversal in silver. So I would encourage all of you, if you have gold and silver positions that you're looking to add to, use this dip as a buy the dip moment and use the weakness to your advantage. We are absolutely in a commodity super cycle. The question you have to ask yourself is, what is the end game and how long do you have to let the volatility play itself out, right? I always use Patriot Battery Metals for the simple fact that, one, it changed a lot of our lives. Two, our group still has, over 85%, 80 to 85% of the original position. And three, anytime my friends and I get together and I get the calls and I get the subscriber emails about not taking profits at higher levels in the letter and in our group position that we have. And to be clear, I've trimmed, substantially on my personal position for other reasons and rotation, but our group's position is 85% plus of the original shares. And so when I tell them is, look, the end game was always let the company define how big this thing is, or let it get taken out, and or let now Ken Brinsden, right, put it into production and make this a dividend paying legacy stock that you hold for a very, very long time. So until I see something that shows me that neither one of those three are likely, I'm not selling the bulk of the group's position. We're going to ride that out. We'll trim where we need to. If there's something, appealing like a Hannon, which I think can be a 100-fold gain type of stock, absolutely, we're going to rotate heavily into that. But the end game is still intact for a company like Patriot. I know what the end game there is. Again, it's production. It's define how big it is, and or it gets taken out. And if it gets taken out, it's going to be at much, much higher prices. I also know how quickly the lithium market can turn. People forget a year and a half ago, we were at all-time highs, guys. It hasn't been that long, right? Now here we are on the lithium spot price at all-time lows, or near all-time lows here of this current bull cycle, this last bull cycle. And that's just the way the lithium market goes. So I understand the timeline that we have as a group. I understand why the position is as robust as it is. And again, I've told you this privately, and I think I said it publicly here, but if it stays at current levels for 6 to 12 months and, the Hannons of the world and several private companies that are going public do what I think they're going to do, I'll rotate heavily and double down on Patriot's position, not just individually, but as a group. And the group, again, we own quite a few shares. So you got to have a strategy in play. I encourage everybody to define your timeline when you allocate capital and know that at some point you're probably going to be down 50, 60%. It's the nature of the resource space. Check your investment thesis and let it play out. If the thesis is still in play, ride the volatility out. It's usually okay.
Well, and know your levels too. You talked about, I'm going to mention a couple of things here. You talked about using the short-term volatility and price action to average in it. And we've done that. I'm not going to tell you the company, but it's one in Brazil that we've been involved in for a while that we were looking at gaps in charts, and I recently made a new discovery. It ran up and we sold some, and now it's selling off along with everything else. And we're buying back in. So use the ongoing ups and downs of the market to affect your market strategy, the one that Gerardo just said that you should have over the timeline that you want to be in a position, or you think you want to be in a position. And the second thing I wanted to say there is not necessarily about commodities, but newsletters. There's all different styles, and I've been thinking about how best to serve readers and the different styles of letters that we offer, and how to follow along. And this goes on to a conversation that you and I had last week about private placements, and you can't just do one, and we can't just give you one stock tip because we're managing money over time, right? And so, while for some, like maybe people who just listen to the podcast and hear you say Patriot's going to the moon and only buy Patriot, and then, write in and say, oh, I thought Patriot was going to the moon or whatever. And it's like, yeah, but you missed the other 4 in the interim that we've made 2 to 500% on, or whatever it is, right? I just made that up. So you've got to sort of be in tune, and that's it. That's sort of what I wanted to say. I was going to give you an example. Because we also don't press the buy and sell button for you. And that's another sort of layer of this,
Sure.
Right? Like we give you what we think are good ideas, when to buy and when to sell, but ultimately that's up to you. And so the example here is a company called Pure Cycle, which is a plastics recycling company that we started buying in Hodge Family Office in summer 2022. So it's been 2 years at around $6. And they've got a license on this technology to recycle polypropylene, which not many other firms can do, certainly not any publicly traded ones. And they were going into production with their first facility, and the stock doubled in like 7 to 8 months. It went to like $12, right? We were in at $6. And I wrote to people and I said, stock has doubled. I'm not selling, but do what you want to do. So you had the opportunity to double your money in 7 or 8 months if you wanted. My advice was not to do that. I'm staying in. So what happened? They have an issue at their facility, right? At their first facility, a ramp up issue. They didn't hit their initial milestone production targets. The shares go from $12 to like $2.50 over the course of the next 4 or 5 months, complete round trip and then some. But I'm commenting every week, right? This is the point of the benefit of newsletters is what I'm getting at. Every week I'm writing because I write every week and I'm telling you what's going on, what's happening. And most importantly, what I'm doing with my own money. That's the important part here, right? Because, shares got below $3 earlier this year and it was the end of the world, right? Market was shorted. People were on social media saying the technology was bogus, company was a scam, yada, yada. That's never going to work. And I was saying, look, I'm buying shares below $3. You, again, do what you want to do, just like you could have sold for a double, but I'm buying here below $3. So ultimately, I got my buy-in price to around $5. And this week, the company underwent a short squeeze. So fast forward the tape, the technology is okay. The ramp up is now back underway. The shorts are now getting squeezed. Shares get squeezed this week, and the shares pop well above $7, right? Putting me up almost 50% on my shares, which I had been advising on. So we sell, or I sell, and I write that I sell, right? I made 40 some percent, right? What did you make is my question. I don't know what you made. Did you sell a year ago when it was at a double? Did you follow me the whole way down? I don't know. So the benefit of newsletters, though, is that you had the opportunity to do both. You had the opportunity to double your money in 8 months if you were following along. You had the opportunity to follow me the whole way and buy an average down and sell for a profit, albeit not a double in 8 months, but a smart profit that was higher than the S&P went up. And we made good money on that position. So it's hard to do with just listening to a podcast like this or just taking one sound bite of somebody saying they like a stock. And it's much easier if you're following along with real money over real durations of time. So I think that's one of the disconnects between newsletter readers and newsletter writers, especially as there's been a lot of different diversified voices and there's a lot of different ways to do it, right? Trading systems, paper trading, etc. What I'm saying is, I'm not saying we have the best system. I'd like to think we do, and we have great results, but you've got to pick one and sort of follow it over time to see those results, right? And again, as I said last week, the results for us are clear as evidenced by reality. I mean, I don't know how else to say that. So we've had success investing over time. And if you'd like to follow along, whether that's in private placements or, junior resource speculations or just speculations in general, plastic resource recycling companies, for example, then check out some of the stuff we do because we're putting our real dollars on the line. So anyway, sorry for the divergence.
No. I think it was a great answer. It's a perfect segue to what I wanted to talk about, which is if you want to get behind a trend, and we touched on it last week and the week before and the year before and the year before that, and it's why we're up several 100% on a lot of our uranium positions. If you want that type of opportunity and that type of upside, you have to risk being early and you have to risk being wrong for a bit, because that's just the nature of being a contrarian and the nature of being early. Uranium right now, this current dip to the $82, $83 level and the sell-off in the equities is an absolute gift out there. I encourage anyone that doesn't yet have uranium as part of their portfolio to reach out, send us a note, subscribe to one of the newsletters, or just listen to this podcast for some ideas. Obviously, I would do my due diligence a little further than just listening to this podcast, but the uranium trend right now is bullish. The pullback is, again, a gift to my contrarian heart. And if you all thought that because your little uranium explorer, like several of my little uranium explorers, are down 60%, if you all thought that was going to be the end of the uranium bull cycle, there's a whole another couple of legs upcoming where those explorers will absolutely catch a bid. The ones that make discoveries will be up 10, 20, 30-fold. And the producers that are going to catch the sweet spot of the profit cycle, which will be the next several years, are going to do very, very well and obviously capture the first of the next set of gains, right? So I say that to say hugely bullish on uranium the way I am hugely bullish on copper. Good opportunities out in the market everywhere. If you're down 50, 60% on your explorers, I wouldn't worry too much about that right now. This isn't the time for the explorers that don't have discoveries to appreciated value. That'll come.
Bad news first, and then good news. Uranium equities are now troubled technically. If I'm looking at the chart, I'm just looking at the URA ETF, for example. It's now broken down in a relatively meaningful way. It's at $26.95, and likely it's got to go to $25.75. There's a gap in the chart from last September before it bottoms out. So, which leads to the good news, right? An opportunity to buy uranium, back to the short-term price action inside of a long-term bull cycle. So the context matters, and again, reality matters. So we put out promotions, newsletter promotions. It's no secret. We call them promos, your video sales letters, and you see these from all kinds of different publishers. It's sort of the industry standard way to promote your newsletter or your service. And we've done a couple about uranium. One we did with me holding up a uranium sort of rock, a mineralized rock, back in 2021. And we were telling you that the cycle for uranium was coming and was likely going to go to over $100 a pound. And that was the right call. We laid out why. And that was before uranium went to $100 a pound. And then last year, 2023. In the summer, we sort of re-updated that. This time you were on video and you were talking about why you believed uranium could ultimately overshoot to $200 a pound. And now context matters, right? Because that was during a pretty steep pullback in the uranium space. You'll recall we had a good run in late 2021 and into 2022, and then it sold off hard. And then in 2023, it ran hard again. I'm just looking at the chart here. Ahead of that run in late 2023, we put out that second video, again, with you talking, saying, I think uranium is gearing up for a run and overshoot to $200 a pound. And again, that was sort of great timing and really, really prescient information to put out there. You got the Inflation Reduction Act. You got new plants coming online in the U.S. state of Georgia. You had the extension of reactors in California. You had the UN climate meeting in the UAE, I believe it was, where 20 nations agreed to, I think it was double their nuclear output by 2050 or maybe even triple it. But anyway, all the catalysts that we were saying is coming, the government funding, the increasing acceptance, the need for clean baseload, all those boxes, sort of were now being checked off, right? So flash forward here to 2024, you're getting another now major correction. It was mostly sideways for the past couple of months. Now it's broken down. We're putting out a new video saying, hey, look, we get kind of actually meta and we break what they would call the fourth wall. We say, look at these past two videos we put out, sort of like I just laid out for you. One in 2021, one in 2023, saying that this uranium thing was happening. Everything that we said was spot on. Here we are in 2024, and it comes up to the modern day, sort of where you and I are talking now. All these things have lined up for the uranium bull market, but it's not done yet. Look backward at these previous bull cycles, Cigar Lake, et cetera, and how these uranium equities ran, and we still have a long way to go. Yes, we've made some money, and that's an important point, right? In those presentations we put out over the past couple of years, we say buy these stocks because they're going up. That's the ultimate point, right? You're subscribing to Junior Resource Monthly to get the name of uranium stocks because the uranium stocks are going to go up. Well, go up they did in the Junior Uranium Junior Resource Monthly portfolio, especially in the case of UEC, which is one that we highlight in this promotion. And we gave away for free in some of those previous videos, saying it was going to be a leader, sort of a blue chip uranium stock, because there's not a lot of them out there. And that too turned out to be correct. UEC was and has been one of the leading equities of the uranium run over the past couple of years. And so anyway, I didn't want to get caught up in the week-to-week hand-wringing of, uranium's back down to $80 a pound, it broke trend, or it's this or it's that. And I wanted to take a step back and look at it from a wider lens, from a higher altitude, and check in where we are. And so that's what we just did. We still have a lot of capital allocated to uranium. I won't speak for Gerardo, but me, I have it allocated to ETFs and foundational profits, and then developers and explorers. And so we continue to follow the sector, continue to be long-term bullish on it. And as I've said for a while now, is you're in a bull market and you have to now deal with it as it comes. You've got a quality pullback here, and we'll have a new video out about what to do with that and the equities that you, Gerardo, are recommending as a result. And I think that'll be out this week by the time the podcast is out. So start keeping an eye out for that, and by all means, you'll see it over a daily profit cycle.
You got it. And look, again, not to brag or what have you, but we've held uranium positions through the volatility, through the ups, through the downs, and knowing the end game and knowing where we're at in the cycle has paid off beautifully for myself and subscribers. One company up, I'm looking at the portfolio right now. It's up 323%. This is after the pullback, right? Another one's up 170%. Another one's up 96%. I could keep going. Another one's up 77%. This is after the pullback. And so when you look at volatility, I could tell you every single one of those positions I just cited at one point was down 50% or more, right? When uranium pulled back and looked like it was going to zero or negative the way oil did. And that was the gloom and doom. I'm seeing that a lot of that now on Twitter. The most bullish uranium speculators are tapping out and upset that they went in as big as they did, and everybody's got to decide what the risk tolerance is. But again, this is a minor pullback in a major bull market. You can make a lot of money timing those dips if you have the wherewithal to stick by those positions, like in lithium, like in uranium, like in this copper market that we have right now. There's a lot of money to be made, folks. These are just minor pullbacks in a major bull market. I actually still think lithium's in a bull market, but clearly the past year and a half, it's been in the tank. Believe you me, it'll bounce back. And when you spread it out over a 5-6 year chart, it'll look this way. But you're going to have to give it some time, and you got to ride the volatility out. And that's just the name of the game, right? You got to know why you own stuff and how long you're going to own it for.
It's exceedingly cheap this week, just your lithium specifically. I had positions I've owned for a long time, as you know. Arcadium is one of them that came, I think, from Advantage all the way back in or Cobre, et cetera, et cetera, et cetera. And so I just watched that almost as a barometer, right? Like, I don't have a ton of it, but I like to keep it there because I know what it was worth and I know what it's worth now. And when I look at it, it's like, oh shit, like the lithium sector's got to be close to bottom, right?
Yeah, for sure. And my contrarian indicator, right, is Patriot, because I'm looking at it and going, I know what that asset's worth now. I know what that asset will be worth in 2 to 3 years, and I really know what it's going to be worth if Ken gets it into production. Though I don't think, he decided to move to Montreal to enjoy the winters with his family. I think he's got a shorter timeline to monetizing that asset, and I know it won't be anywhere near these prices. I sleep easy with Patriot. Would I rather see it at $20? Of course, I would rather see it at $20. Would I rather see it at $30? Of course, I'd rather see it at $30. But there's some opportunity there because, again, there's other large positions that I have that they keep performing the way they're performing. I'm going to rotate and come back and double down on that Patriot position and bulk it up and ramp it up and then just watch the next leg up and smile in a couple of years. So know what you're aiming at, know what you're shooting at, know what your target is, and define that risk tolerance, folks. Everybody's built differently.
And just one last thing on following over time, taking profits, buying back, and following what we do with our own money. And on uranium specifically, I know we've said it a bunch, and if you're a routine listener of this podcast, excuse me, but there's new people out there all the time. And so I look at a company like Encore, right, which we own, or I own, as a result of multiple acquisitions, right? Going back 2 companies before, right? Share acquisition, and then I become an Encore shareholder, goes on to list on the NASDAQ, becomes the latest producer. I've sold shares along the way. And so just as an example, right, like have a negative 6-figure cost basis in the stock, right, and still own like several thousands and thousands of shares in a stock that's trading at $5, right? So have paid myself over 6 figures to own over 6 figures in the stock. And that's over time, right? And that's how we sort of manage positions. And so again, back to that pure cycle, and if you came in and you were buying it when after 7 months, when I was saying you might think about selling half at a double here, and you bought it at 13 and then it went to 2. Well, I mean, you got to sort of follow these things over time and do what we do again with multiple positions. And then, again, reality, as I just evidenced by looking up my cost basis in Encore, is where the rubber meets the road, or where the writing is on the wall, right? And that's a position that I continue to manage. So, I wake up and I see uranium's at 80, or the URA is breaking down. And to me, it's like, oh, well, I don't have to worry about my cost basis on Encore, or I don't have to see, is it like above 5? Can I get out? Because I've literally have gotten out, have paid myself to get out and continue to own shares. And so it's a different sort of thought process managing the position like that over time. And that's what we do in the letters.
I like it. Let's get to JD Vance, man. I gave the guy a little credit last week. Said it was a good pick for the Trumpster. Said it was a smart pick for the Trumpster. Said he's got a lot of appeal with a lot of the Republican base. Clearly an accomplished background. I said he was clearly an intelligent guy. And I'm starting to doubt the common sense aspect of media relations intelligence level. Just by, some of the things that have surfaced and some of the things that he's doubled down on. So I know, the funnier stuff was calling women that are childless a bunch of childless cat ladies. Back in 2021, he said this on Tucker Carlson's former Fox News show. He said he believes people who go home at night and see the face of a smiling kid, whatever their profession, I think they're happier, I think they're healthier, and they're going to be better prepared to actually lead this country. He's also said that he believes that parents with children's vote should count more than people who are childless. So he's got a lot of interesting takes that I don't know are going to play very well with not just Republican women, just women in general. I mean, there's, Jennifer Aniston obviously was the famous one that had the comment saying, hey, fucker, I've been trying to get pregnant for years and I've struggled with this. And it's a serious thing to me. So for you to call people like me a childless cat lady, that doesn't deserve to have as big a voice in this democracy as someone like you who has stepchildren, or someone like, that was fortunate enough to have biological children without any issues. I don't know that that's going to play well with any woman, let alone, some of the other comments and his some of the Project 2025 beliefs on contraception, where, if you believe that the Heritage Foundation and Project 2025 is directly related to Donald Trump, and that's going to be the 900-page manifesto of policy over the next, 4 years if Trump is elected, then you kind of got to start looking at some of the things, right? I mean, they want to do a number of things that just seem outright crazy. There's some things in there that I like. There's a lot of things in there that I don't. Banning all contraception. I thought this was the party of less government. I thought this was the party of, stay out of my bedroom and let us have our guns and you can't take our guns and we're all for individual rights. That seems like the complete antithesis of what personal individual rights are. Somebody telling me or my wife or a girlfriend or whatever, what they can or can't use for contraception. Right. Let alone, let's not even get into the abortion debate and all of that. We'll just leave that for another day. Contraception. I mean, that seems like, fuck, you don't want us to have any fun. Like, what are you talking about? Any thoughts on Mr. Vance in his first week in public as Trump's vice presidential candidate? He's managed to piss off a lot of people, including people in his own party.
I honestly haven't seen much. I haven't listened to the speech he gave at the convention. I saw some headlines about a couch and I saw some headlines about Mountain Dew, but I haven't seen too much. And my wife was talking about, as Miss Anderson was, about his opinion towards reproductive rights, abortion, etc. So, which is a really obviously hot button issue, one that I've evolved on over time. I mean, I'm firmly on the woman's right to choose as a libertarian, but my thoughts have evolved as far as the term is concerned and things like that. So I've seen some of his past comments. What I've also seen is sort of a softening, though, as we get closer to the thing. You mentioned the year 2021. That's a while ago. It's certainly in political terms as well. And what I've seen lately is a softening, like back to the debate, which also seems like it was a lifetime ago, but it was only a couple of weeks ago. And I was listening to Trump on the abortion question, and I was like, this is like the most nuanced I've ever heard this guy talk in my life. Like, what is going on? And it seems to me like they're getting some of the feedback that you just laid out there. Like, hey, come on, guys. This is like one of the issues that is you're faltering with women and like independents and libertarians are. Like, let's not say that it's outright blanket and default, right? And so what I've heard over the past couple of weeks, and I don't know anything about those old comments, just what I've heard over the past couple of weeks is it's a states' right issue. We support the access to Plan B, which I believe they both have said, because wasn't there a Supreme Court decision about access to Plan B or something like that? And Trump said
Correct.
He wouldn't touch that. And I think Vance said he wouldn't touch that at all. And so just inferring, just doing the logical exercise of inference, if they're okay with Plan B, I don't know if that translates to contraception is not. And I haven't read any of the Project 2025 stuff, so I don't know what that says. But it seems to me, at least in talk, which, again, what I've learned in my 40 years is that a lot of politics is talk. It seems like at least in talk, they're willing to soften their stance for this election. Now, that's talk, and that's the clicks and the social media stuff of the past, 7 days, which, is the ether, right? Where the rubber meets the road is that in a very real way, women on the reproductive side of things have been under pressure. I mean, I live next door to Idaho, for example, and I've told you on this podcast at some hospitals in North Idaho, some, I can't say it. Gynecologists and women's health doctors have stopped practicing in the area, right? Because they're afraid of even accidentally aborting a pregnancy and then as a result being held criminally liable or whatever it is, right? So, and as a result, those women have to come to Washington or do whatever it is. So those policies have real world implications. And I'd like to hear some more talk about that as opposed to the clickbait soundbite stuff. But anyway, so yes, I've heard some of the stuff that you've heard and seen from the Anistons and that sort of cohort. And then I see what they're doing in real time to soften that stance. The problem on both sides is I don't know what their real stance is. And that's the problem across the board, man.
And that was my next point. We're wasting time with a headline. This is an AP line. This isn't like the New York Post or like the tabloids or TMZ. The headline was, no, J.D. Vance did not have sex with a couch. This is an Associated Press headline. I'm sitting here going, I thought this was like the most consequential election in American history, is what's being told to me by both sides, right? The Democrats are saying it. Joe Biden, in an eloquent statement, by the way, his statement on dropping out of the race, I thought was a good 11-minute statement that, spoke to his public service. And I disagreed with a lot of his policy. I agree with a lot of his other policy. He's got some stuff in the Inflation Reduction Act that I really, really like that I think is going to be a legacy law, a legacy piece of legislation. I think a lot of good will come out of that. But a lot of things I didn't like, a lot of things I really like. I thought the statement was classy. I thought it was well said. But the part that's disheartening is a week after I'm told that this is the most consequential election in American history, I'm reading headlines about whether or not J.D. Vance had sex with a couch. And I'm just like, I'm looking at this like, what world are we living in right now? Like, it has to be a simulation, man. It all has to be a simulation. They say, what's the old saying? You get the politicians you deserve as a citizenry, right? By who you vote for and the dialogue you encourage and the stuff that you defend. And my God, I really want to get to the part where like we can have a substantive debate on the issues. We don't have to agree. We can disagree civilly. We can find common ground where we can find common ground, and where there's no common ground to be found, we can be civil about it. But it doesn't seem like we're there yet. I would love to hear what everyone's real position is. I would love to know what Kamala's real position is on immigration, right? I would like to know what the right's real position is on immigration, though they're pretty more straightforward about that. I would like to hear what the right's real position is on contraception, on a woman's right to abortion, on the economy. I mean, all these things are very consequential in a very, very real way for people's lives, and especially the lower and middle class. And so I hope we get there before November. I don't know that we do. I know Kamala's got a vice president to elect, a vice presidential candidate to elect. It'll be interesting to see who she picks. I think somebody like Pete would probably make a good candidate. I spoke to my Washington insider, and he said Pete would be the best candidate, likely for the left. However, he might be too gay.
You're talking about Pete Buttigieg. You're talking
correct.
about.
Yes. Speaks well, debates well, good on policy. Has gaffes like everybody else has gaffes. But don't know if he'll play. And then who's the other person? I was told.
Do you want to know what the betting market said?
Ooh, you do that, and I'll look up what
betting market says Mark Kelly is leading at 36%, followed by Josh Shapiro, followed by Roy Cooper, who is the governor of North Carolina, followed in fourth by Mr. Buttigieg.
Yeah. So the person I spoke with said, my best bet is Josh Shapiro from Pennsylvania will get the VP nod.
He's second, 20% on the betting markets.
Yeah.
Which nailed Vance and nailed. I was telling you a couple of weeks ago about the Biden having a 66% chance just of being the nominee. And you were like, you said, say that again.
That's just to be the nominee.
Right?
Yeah.
And there you go. That's already happened and it's come and gone. So what I was going to say is maybe that's a good thing, Kamala hasn't been crowned or anointed yet, although she's pretty damn close. I think the betting market has her at 94%. But if there is some sort of open convention on that side, obviously the primary is too late. But that would give a chance for some actual ideas and policy to be batted around, right? And that's what I think some of those Democratic donors were wanting is like, let's not just give it to Kamala, but let's have a sort of a round robin debate and get some ideas out there. And that's what you're talking about. I don't know about the right, for a while and still is, one of my major problems with Trump. I could care less about the gaffes and some of the other stuff, but he would just say two different things and you wouldn't
same
know
day sometimes.
what he was actually saying. And so for me, I just had to sort of dismiss all of it. Right. And I guess at this point you have 4 years of a record that you can sort of look back on. And I think for me, that's what I'm comparing things, right? Because it's one thing, again, perfectly back to our example, it's one thing to be saying things in the past week and have the social media amplification, but let's look back on the 4 years he was president and look what actually happened. So, and also he was a Democrat, so Trump was way back in the day. So anyway, all that to say, I don't know what J.D. Vance's actual stance is on abortion, but it hasn't been going the right way as influenced from the Republican side of things, specifically as it relates to their appointment of Supreme Court justices. So I would like to see it soften for sure.
Yeah, agreed.
But last thing, but I don't think it's a deal-breaking issue for most voters.
I agree. I agree with that. Let's see how the next several months play out. If you believe that the deep state, the government, the military-industrial complex, corporations, whatever you want to call them, if you believe that the Trumpster getting all his head almost blown off was an inside thing, again, I said it last week. I'm not wishing for it. It's just history. Those don't tend to be one-off incidents, and they don't tend to be partisan. Right? It just tends to be, let's get rid of the people that we can't control. I don't know that if that was the case, that they're done. I don't know that they're done with the Trumpster. I don't know that they're done with Kamala if they don't believe she'll play ball the way that they want her to play ball. And so, look, Neil Howe said it best, right? The fourth turning. I keep the book right here. I got to get to it. But he had an article that I read earlier, and he wrote it beautifully. He said, sometimes in history, nothing happens for years, and sometimes years happen in a day or in a week. And he said this past week, these past 10 days, it feels like many, many years of history just happened. And he said historically, once that starts, it becomes more and more volatile because it kind of feeds on itself, especially on a botched assassination attempt. Whoever you believe did it, it happened. And that was very much real. Whether you believe Trump got hit in the ear by a flying piece of glass or he got hit by a bullet is really inconsequential. The bottom line is bullets were flying that way. People lost their lives, and people were hurt. And so it's going to be a real interesting couple of months. I think there's, I wrote about this yesterday, I believe, or 2 days ago, but it's societal implications, economic implications. Going to see. It's going to be what it's going to be, and we're going to see what that is. But fourth turnings are never, one-offs when it comes to those types of attempts on politicians' lives.
No, it's a perfect place to end. And the other thing he was saying is that it's not very uncommon. Like last week, I was telling you about the 20% of Americans who were calling for political violence and why it shouldn't be unexpected from that perspective. But from the perspective of assassination attempts themselves, he was saying, 1 in 6 presidents have had an attempt on their lives, right? We recall Lincoln and we recall JFK, but you
Reagan.
don't recall Garfield or Nixon or Ford or right. So, 1 in 6 is, just below 20% there. And so, and it does tend to happen in clusters, right? When you talk about like the 60s, for example, with not just presidential, but, Senate candidates and et cetera. So anyway, that's a good place to wrap it up. The turning is going to turn for several more years to come. And we'll have fun here navigating it with you.
I like it. In the meantime, if you want random market commentary from myself, from Mr. Hodge, from our talented group of editors, go to dailyprofitcycle.com/subscribe. I got to leave you with a joke. Somebody put a picture of a couch. You remember how they would leave the plastic on the couch so that the couch didn't get ruined, right? And if you grew up broke, you know what I'm talking about. And so somebody attached the quote. They put a picture of the couch with the plastic still on it. And they put this quote and attributed it to J.D. Vance, who clearly didn't say this. I want to really feel you, though.
He's clearly not anti-contraception.
Oh, that's all we got this week, folks. I am Gerardo Del Real, along with Mr. Nick Hodge. This was the 279th episode of our weekly therapy session that we call Investing in Bizarro World. Everything out there is cheap right now. If you're liquid and you have capital, you need to be taking advantage of these pullbacks and these markets the next several years. Millions and millions and millions of dollars are going to be made. Get in the game, folks. And, like we said, define the timeline, the risk tolerance, the end game, the investment thesis, and good luck.
See you next week.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.